Good morning, evening, afternoon, everybody. Welcome to the Invest Success Podcast. I'm your host, Tim Emery, along with my partner, Jim Edenfield. And we have a great show today talking about something we love to talk about, money.
OPM.
And other people's money. Because finding money for every deal gets a little hard sometimes. And we want to learn how to do that. So we have an expert in the room, Mr. Kevin Amolsch. Welcome to the show from Pine Financial. Kevin, introduce yourself and tell us a little bit more about Pine Financial.
Tim, it's so awesome to be here in studio, the Tim and Jim Show. What is up? I'm happy to be here, man. My name is Kevin Amolsch. I'm the founder of Pine Financial Group. Pine Financial has been in business over 16 years now, if you could believe that. I've been investing in real estate for over 20. I know I don't look like that. So we raise private money and we lend it out to real estate developers. So think about your fix and flippers, your repositioning an asset, adding value to it. That's what you guys teach in your courses. So we're just the money behind that.
Mm-hmm. So I'm going to ask the basic question I get from basic new people. Why does it cost so much, and is 10% or 12% or 14%? That sounds like a lot of money.
Yeah, I get that all the time, Tim. It's like, so loan shark, right? Like, why?
Guido.
Look, it's so funny because it is expensive when you compare it to like a bank or a conventional loan. It's very cheap, inexpensive when you compare it to other avenues that you could fund your deals. Like, for example, partnerships. If you're out there doing high profitable deals like you guys are teaching in your courses, and you're bringing in partners, you're raising private money and bringing in partners, that's very expensive. But we don't hear, well, I just had to pay half my profit away. Instead, I'm paying 12% or 13%. So look, it's just a tool in the tool belt. I pull out a screwdriver when I'm going to drive in a screw. I pull out a hammer when I'm going to hit a nail, right? Which tool do I need to pull out of the investor toolkit to accomplish the goal I'm trying to accomplish?
And sometimes your money is the only way the deal is going to happen. Banks aren't going to touch a majority of what our students are doing.
So you're teaching them probably that you can use hard money as a way to do deals.
Well, it's a way to get into deals with leverage, right? Mm-hmm. So you can make a higher profit per deal lowering your leverage. Obviously, you pay all cash, your profit will go up, but your return will go down, right? So if you bring in some leverage, your returns go up, but it allows you, back to your point, to get into the project. And there's times, it's a little tougher right now with the way the economy is, but there are times where we could finance 100% of the deal. So it's literally no money out of pocket, and you're acquiring real estate.
Mm-hmm. And one of the things about hard money is because it's higher cost, it's usually shorter term. And traditional banks, for all you guys out there who don't know this, traditional banks do not like risk. I don't know if you've heard that before. That's why they only give you a 2 or 3% return on your savings account. They don't like risk. Short-term money, fix and flipping, is a risky business. One of the reasons that hard money is so expensive, and it's short. And Kevin, the shortness of it makes you want to loan your money out more. Is that right?
Well, sure. Now I'm actually remembering what Jim said, so I'm going to answer your question because he was talking about the why people use it.
Let's go step back.
We're having so much fun here, guys.
I ramble a lot. Hey, we do have fun here. We try to have fun.
Yes.
I was in the class and we were talking about when to use hard money. And why would I pull out that tool out of the tool belt? And a room full of realtors, but there's a couple of lenders in the room. And so I showed this picture up on the screen of a completely terrible, ugly, falling off the foundation house. And so I said, okay, you're a lender, leave your hand up if you could finance this deal. And of course, all the hands go down. And the reason they can't finance that, Jim, is because it's not habitable. So a lot of banks and conventional lenders will not touch the stuff that we want to be buying, right? The way we make money as fix and flippers is to add value. I truly believe that properties trade at value, especially if there's any kind of marketing exposure like the MLS. If you're buying something out of the MLS, you're paying retail price. I firmly believe that. But you could still make money paying full price because you're adding the value to the real estate, right? Mm-hmm. So I think that's what makes hard and private money so valuable to real estate investors. We want the beat up, ugly houses that the other lenders don't want.
Yep.
And another thing too is the bank sees it's the value today. They're going to lend on today.
Yeah.
You've got a crystal ball and magic glasses. You can look into the future. Okay, it's worth $200 today, but it's going to be worth $600K when the guy finishes it. And that's what you're marking
Yeah,
your
that's
numbers
interesting
off
to say
of.
the crystal ball. I'll take that compliment. No, we're looking at today's value as if it was repaired. Right now, the market could shift that a little bit, and look, it's only until it actually sells. It's just an opinion, right? Real estate's the only commodity in the world that's not a free market. Like, it doesn't trade with open buyers and sellers arm's length, because someone's opinion, an appraiser, will change the value of the real estate. It's the only thing that does that. Right, so we're taking an opinion of value based on what it would be worth once it's fixed up, and we're using that number to base our loan amount on. So 70% of an after repaired value, ARV, and we'll finance 100% of the cost up to that cap. So I know I might have lost some people here, so let me just break it down with numbers. $100,000 value of a property. Let's say you get that for $50,000 because it needs a ton of work, right? So then we will loan 70. So you have $50,000 to buy it and up to $20,000 in repairs, and we'll still finance 100% because we're loaning $70,000 on that $100,000 house.
Yep. Which are good numbers. Now, that's not a Denver number.
Oh, I'm
anymore.
just using it as a very simple example.
Yeah,
but- right.
it just makes sense. You know, we're looking at some of that property in Mobile where we're doing fix and flips and stuff like that. The numbers are similar to that, which makes it a lot easier to work with. Now, the costs are not as small as you think, but that's what we're designed for. Jim, you talk about that crystal ball with Kevin, though. It's really not a crystal ball. There's no hope. And
I'm just saying they're looking into the future.
We're looking into the future based on what? Kevin, when you analyze the deal, what are you looking at?
Well, we're looking at, we want it to be a successful project all the way around. So we're looking at multiple things here, Tim. First of all, we want to make sure it's a profitable project. So we're looking at that ARV. We're basing that number on what your plan of construction is going to be. So you got to tell me what you're buying it for, what work you're going to do. I want to know the material type. I don't need to know the colors, but are you going to do Formica or granite or whatever? I need to know that type of thing so we can come up with a true ARV. And then outside of that, we run it through our calculator and make sure that the number's black, not red. It's got to be a profitable deal. Otherwise, you go find another lender to fund it for you. And then we're going to make sure that you are being safe as a borrower. So do you have the liquidity? Because as you know, and we just said it in the hallway, people go over their budget. I'm sure you guys do. Our best clients miss on their budgets because you find stuff that you didn't see when you bought the property. So we always build in contingencies. We're expecting you to go over your budget. So you need to have a little bit of safety net, a little bit of liquidity to make sure you get through that project and get to your profit.
Right. Tim tells our students in our networking events a lot is like if a hard money company says no, this is not a deal, you better listen up.
You know what I've seen, and one of my top 10 mistakes that I teach is going, being emotional in this business. See, there's two things that are extremely emotional in this business, and that's real estate and money. Right? That brings out this weird emotion that makes people stop making business decisions and start making personal emotional decisions, and that's when we lose money.
And I've shared this now probably about 4 of our podcasts. We were looking at a deal. We wanted it. We wanted it. And, we always talk about one of the first classes I took with you is you do that thing in pen, no pencils.
Yeah, that's right.
Because if it doesn't work, I can erase it and change the number. I tell that over and over. Well, we broke that cardinal rule because we wanted this project. We had a spread. We'll change this, change that, change it. We wasted a lot of time because even in all that, it's like it's not going to work. So it's okay. We got to go back to our rules.
So did you feel? Now I'm just going to ask you a question because when I hear this and I see this mistake, a lot of investors make this. Did you feel an emotional attachment to that property?
Yeah, we wanted it. We had it pictured.
What's creating that emotion?
I didn't want it.
I did. I mean, we had it. It was an apartment complex. We were going to take one unit. That was going to be our home office. So we had a place to stay whenever we went there.
That'll do it.
We were going to take it from dog ugly, empty to beautiful and occupied. I got $4,000 there. I want to go there as much as I can. We want this. It's a great deal. It's going to be a great project. And that was our first project we found in Mobile. Now we get a house right behind it, and that house is on the market right now. But it was like, I can see us there living. I want this.
So if you could train yourself, and listen to me, the listeners of your podcast, if you could train yourself to feel that emotion and recognize it, that's when you stop.
Right.
Don't buy it.
Right.
Don't
And we didn't
try
end
to
up buying
make it. We
So,
did.
Good.
So
We walked away. And
yeah, we walked away. We got our earnest money back.
Good.
Yeah. But the problem was that the financing wasn't working out the way we needed it to. So the numbers didn't work. And when we sat down and we really looked at it hard and analyzed it, figured out the numbers weren't going to work for what we needed. Now, it might work for somebody else. It just wasn't working for us because we had to leverage a lot more money than somebody else could have done it.
Well, some of our scenarios, we go, what if, would have worked. But that was a big what if.
Yeah.
And it was like, Tim, well, we could do this. And I'm like, well, Tim, we can't guarantee that.
Mm-hmm.
Yeah.
And that's a lot of money to go in on a big if.
I'm glad you guys. I'm glad you guys recognize.
See, I listened to you way back in 2012. I was listening to you, brother.
And we practice what we preach because we did it. And now we have when we go to our students, we tell this story. You know, when you're teaching people, it's not all about
The book
we're the
says
experts
this.
and we do everything perfectly. We make mistakes too. And that's one of the big keys to this business is learning how to make that mistake and recognizing that mistake. So if somebody out there in podcast land can hear us and say, oh, all right, maybe I don't have to get emotional about this, that's great. That's really important.
No, that's great. And I mean, we all make mistakes.
Yeah.
And that's how you learn. So and you're never going to stop learning.
Yep.
Unless it's too terribly bad, I say we don't make any mistakes.
Fair enough.
We have learning experiences.
Yeah.
But the key there is, did you learn from it and not repeat it?
Yes.
Or did you hear that Tim did what I wanted to do and he lost his shirt? I don't need to try to do it again.
Yeah.
I don't want to lose my shirt. So.
Yeah. That's
Right.
good advice.
Right.
So Kevin, you said earlier that you guys raise money as well.
Yeah.
You raise money to loan out to real estate experts. What does that look like? And for more of our experienced people out there listening who may have done a flip or two before, may have had a good job, may have a big 401k or some kind of retirement fund, or somebody that just has a little money, is there some way they can get into the other side of this so they don't have to hammer, so they don't have to deal with contractors and everything? Tell us more about that.
Yeah, I think there's lots of ways to make money in real estate. And right now, where I'm seeing people move towards is a more of the passive approach. And the reason for that is because the cash flow numbers aren't working so well with single family homes. So I'm seeing a lot more groups coming together and buying larger buildings, like maybe an apartment building like you guys were looking at. But it'll be a group of people that come together and all combine resources to make that happen. See, when you have a higher dollar amount per cash flowing property, the emotion goes away for most part because now we're trading on numbers, not emotion. So what you see is the price come down even though the income is still high. So you'll see a good price to income ratio as you combine resources. So a lot of people will call these like syndications. So I'm seeing a lot of that. And then I'm seeing people go into the debt side, which is where I play. So you buy a note that someone else is doing all the work. You're just getting in a little piece of the deal. Maybe you get some profit. Maybe you get a higher return. And then there's mortgage funds. We operate several mortgage funds, and that's a real passive, easy way to get involved. Good cash flow. You give up the upside because you're not owning the real estate. Whoever's doing the real estate transaction is taking the big upside. You're coming in for lower risk, more steady, conservative returns.
And you've also got a program where I could be more passive, more hands off, set it and forget it,
Yeah.
and collect that quarterly check.
Yeah, we pay out every month, but yes, we do invest in a mortgage fund, and then you have an 8%. It's an 8% return annualized, but it's every single month plus a little bit of upside. So it's a pretty decent return. It's a good way to diversify. I was looking at a Tiger 21 presentation. I'm not sure if you guys are familiar with Tiger 21, but to get into this organization, you have to have a net worth of 20 million or higher. And it's really higher than that because it's investable cash of that. So it's a pretty elite group. And I was looking at some of the presentations, and I was seeing their diversification of their portfolios and how they're matching up. And, a lot of them have real estate. It's definitely part of it. But they also have some passive investments like syndications and debt. It's very common to diversify. So you have multiple ways, multiple sources of income, right?
Mm-hmm.
I think all the gurus, they don't put all the eggs in one basket.
Yeah,
so.
and exactly. There's a reason for that.
Yeah. So how does somebody if somebody's out there wanting more information, and we'll give your information out a little bit later, but is it just they write a check to you, hand you the check, and sign a couple papers, or is it
Sort of.
more, do you do your research on us? And
Yeah, it's interesting you ask it that way, Tim, because as we get bigger and bigger, we have the regulators' eyes are on us more and more. We have 2 fully audited funds, so twice a year we have to report to the government. We have fully audited financials. So one of the things that we're starting to do to make sure we stay compliant with anti-money laundering, I know this is more than you need to know, but we do have to go through a know your customer, which is what you would see with a bank. So verify ID, it runs through a system making sure that you're not a terrorist or whatever. So there's that little hoop that we have to jump through now, but I've heard it takes about 60 seconds online to get through that process, and then it's just, sign the documents and submit the investment, and it's good.
Okay. I think, we were at an event a couple weeks ago where there was a bunch of different booths and different people having stuff, and there was somebody selling mineral rights and oil, and somebody else selling dirt out in California. There are so many ways to get into this business that on a passive level, and not necessarily the fix and flip level, even though you've been doing this for a long time. Are most of your customers right now experienced veteran type people, or are you still working with a lot of the beginner type fix and flippers?
What a great question.
I switched kind of mid range thinking about that.
Here's why I say it's a good question, because we're still in a tight inventory market. We have been for years and years. And so, when you have tight inventory, your margin between your wholesale price and your retail price shrinks. The reason for that is emotion again. So when you have a wholesale price, like say your foreclosures, your beat up properties, and there's not a lot to choose from, all of a sudden people who want to live in the home start wanting to buy that. And that drives the price up, right? But the retail side, the nice pretty homes that we're fixing and flipping, they can't go up at the same pace because they're held down again by appraisers, right? So now you have wholesale prices shooting up and you have retail just kind of going. And so that shrinks a margin, making it very difficult. And so in the markets that we work, we have a low inventory environment, making it harder for investors to be successful. And I'm not trying to be doom and gloom here. I'm just shooting you straight. So it's harder for the newer folks to get in. That's why someone like you, working with you guys, where you're giving them the confidence and you're helping them want to go out there and make the offers.
We're pulling them back a lot more than we're pushing them forward, though, because it's like the numbers are so
scary.
tight.
It's a little scary right now. It will loosen up. And if you could be successful right now in this environment, you're going to make a fortune when you see that market start to shift.
And now's the time to learn the basics.
Quote? We should quote that. Make sure we do a clip of that.
I'm being really honest with you. It's so a long answer to your simple question, but we're seeing more experienced investors right now.
Yeah. It's also because you're one of the longer tenured hard money lenders in the city, in the greater Denver area, who there are hard money lenders that come and go.
Yeah, that's
and
true.
We've seen a lot of people, in the 16 years I've been doing this, or 20 years, I've seen a lot of come and go, and that's kind of finding the people that are here honestly all the time and at all the events and sponsor, and you keep seeing over and over again is really important as far as I'm concerned.
Yeah, we hung out with Justin just this weekend or at a recent event. Yeah, we were close to each other. We got to pick on each other a little bit. And speaking of events, you hold an excellent event every October. You just got to get away from the second Saturday of October.
So weird. So we're at the mercy of the venue here, guys. You know that.
And we'll talk to that PPPDDs or whatever they are. But they hold an excellent event. It's the Pine Success Summit. Is that it?
Yeah, the Real Estate Investor Success Summit. We do it here and in Minnesota. Minnesota's coming up in March. We do that one in the spring because it's a big hunting culture out there. It's not as big here, so we get away with it in the fall. In fact, we have seen better results in the fall here and better results out there in the spring.
Right.
But
it's a great day. You bring in real people, bring in real speakers, people who are actually on the ground doing things. And it's a good group, and we love coming to it. We love speaking at it. We'll be ready to speak at it again next year. And it's one of those good events that really catapulted, I think, the real estate investor education that Denver has. And I think Denver's real estate investor education system is probably better than most other states.
Top notch, no question.
And we really, and Pine and you guys starting this really let it off at a top level. So we've had to keep up.
Two
level.
big things with it is it's all Denver local people.
Right.
It's all people that I know personally that are a success, and they're willing to share their knowledge. And for the most part, it's not a sales pitch. He's like, there's no selling from the stage. Yeah, we got booths out front. You can come talk to us, but you go in, and it's usually 2 rooms. I think he used to have 3 rooms at the time, but the last couple of years you've had 2 rooms.
2 rooms, yeah.
The big room, they always have a panel. It's always stuff that's going on in Denver and going on in Denver today. And people have started with little to nothing. Now they're superstars, but it's all real. It's good stuff. And the price is reasonable.
Mm-hmm.
Yeah, we don't do it to make money. You guys know this. We want to do deals with you.
Right.
We just want to meet you and get to know you and help support you. And if we could help you make money and we make money in the process, that's what we're looking for. So we charge enough to pay for the venue, and that's it.
Yeah.
So as we wrap up here, any last words of one sage piece of advice?
Any last words? What I should have asked you is who's actually listening to this so I could talk directly to them. But let me share this with you. I don't know how to put this elegantly, but if you're going to be successful, Tim, you got to actually go out there and do something. If you don't take that first step, you're going to be exactly where you are now. And I know it's scary and there's fear and all of that, but here's the thing. What's more scary? To go out there and make a little mistake or even a big mistake, get up and do it again and move forward.
And learn from the mistake.
Or be where you are right now in this chair in 5 years' time.
Yep.
Tell me what's scary.
You can spend a lot of money on a nice set of books. Back in the day, it was called DVDs. You could get them and watch 1 or 2, put it on the shelf. It's a waste of money. We had a friend, Paul Fink, with us on another episode. His biggest thing was fire.
Just
take action. We've got students, and I know a lot of people will overanalyze a deal days until they can say, it's a great deal, let's go. Oh, it's under contract. Yep. So you got to, when you see a deal, you got to know your numbers. Have your money lined up before, because sometimes the fuse on those deals are short. You got to act. You got to know your numbers and jump on it and go with it.
Well, just like you guys did, you put a deal under contract with 0 risk. You had no risk because you built in a contingency to get your earnest money back.
And keywords and escape clause.
If you can teach your people this, there's 0 risk in this business. Until you actually close, but you could do your diligence and mitigate that, right? But get it under contract.
Yep. So thanks for being here, Kevin. For those of you who don't know, we do a coaching program here in Denver. It's 12 months, hands-on. We meet at properties being flipped every other Monday night. Deep dive into that property, what's going on, where did they find it, how did they fund it, what's going on with the property, have they ran into sewer issues, whatnot. We go through that whole process, and then we're on speed dial, so you can call Jim and I during normal business hours. We'll come look at properties with you if we think they're good deals. We'll say if they're good deals or if they're not good deals. It's up to you to make that decision to go forward with it. But it's really an amazing mentorship program. And then on the last Saturday of the month, we actually hold a property tour where we see 2 active properties and tell you and instruct you how to build a system so you can estimate the rehab cost in under 20 minutes, because time is the most valuable thing we have. So if you're interested in learning more about Invest Success and what we do, check out invest-success.com. And because you stuck around to the end of the video, which we really appreciate, if you come for a free class, sign up for a free class, and then if you join the program, we'll give you a $2,000 discount off it. Ask for Tim or Jim, and we'll get that to you, and we'll change your lives, and we'll set you on a path forward so that you can change things and become an entrepreneur and really enjoy your life. So thanks for being here, and go out and do a deal.
See you next time.